energized to be here today. Very excited to share with you some perspectives from the front lines of VC investing and also product building around what we're seeing at the intersection of Web3 and AI. Inspirational talks this morning by Ilya and the team on this intersection. I'm excited to cover how founders build and scale AI-native crypto products. I like to share our takeaways up front for the next 10 minutes. I'll make the case that we're in a filtration cycle followed by a dispersion cycle. It's neither bear or bull market, but a cleansing of what's going on. This opens up opportunities. It opens up opportunities for Web3 and AI to thrive, structurally positioning everyone in this room to create that transition and to build valuable companies. And then thirdly, based on what we're building in our AI agentic systems at Decasonic, I share a practical framework for building products that endure through those cycles. I'll start with the elephant in the room. There's fear in crypto markets. Crypto fear and greed index is at an all-time low. Until you look at this chart, you don't realize how low it is. It's at 12. Liquidity is tighter. Speculation has cooled. Narratives are repricing. A lot of this is driven by this compression of narratives and a focus by investors around fundamentals. That's where we are today. Under the hood, there are talks in markets around SaaS apocalypse. Bitcoin is tightly correlated with the NASDAQ downturn, especially in non-AI SaaS. Capital is repricing the growth of these SaaS companies that have questionable AI differentiation going forward. Bitcoin, does it have an AI story? Who knows? Near, obviously, is helping us lean into that narrative, differentiating from the pack, and you could see dispersion over time. Again, not financial attacks, legal advice. In the AI era, markets are asking, where is that measurable productivity gain? Where's the durable advantage? And that's the big shift happening right now. Near term, we're seeing filtration. What I mean by filtration is filtration removes the excess. Business models are being challenged. Products are being battle tested in time. The shifts of adoption is happening in real time, similar to .com when I was a VC here down the road in Silicon Valley. Medium to long term, I believe we're in a dispersion cycle. Dispersion rewards founders who are going to lean in and differentiate their products. Capital rewards these durable AI-driven use cases. That's why I believe, this intersection, Web3 and AI, really matters now. Thank you, Nir, for having me. Nir is well aligned to this dispersion cycle. Very inspired by what I'm hearing around intense agents, confidential compute, a lot of the demos you've seen today. That is a positioning that we all collectively need to lean into, build these use cases, collaborate, and then we will get rewarded with this differentiation. So a bit more context about me. I'm Paul Su, founder, CEO, and managing partner of Decasonic. Decasonic is a $50 million early-stage venture firm focused on the Web3 and AI supercycle. I was asked earlier today on the podcast, do you really believe this is a supercycle? Absolutely. These are synergistic technologies. When we build our operating systems, we get deep into understanding that synergy, and we're bullish. We're bullish long term. Not everyone will survive, but we're bullish. We operate an AI operating system, as you see on screen, that orchestrates workflows for 5 humans with 191 AI teammates, a ratio of 40-1. We believe in orchestration and multiplayer AI. This is how we coordinate our workflows to scale my expertise across our investment workflows for investment alpha. I'm a solo GP. We've cloned a lot of experts in our space to draw on non-consensus perspectives. What you see, though, is an operating system that's just the surface. Underneath is our expression of a technical architecture that represents the future of agentic infrastructure. Our technical architecture reflects these various systems. Inputs come into memory. We have our structured memory. It feeds into Open Router for model switching. It applies the right models to the right context at hand. Market timing matters in our business, so context really matters. It spits out a very fine-tuned output that then we feed back with reinforcement learning to improve our future inputs. This architecture is our expression of durability, and we believe this is how we collaborate with founders like you to drive that durability. I've had 3 lessons from building our AIOS. It's been informed by a lot of my .com investing, my Web 2 experience building social media games like Farmville, Words with Friends. 3 lessons really stand out. Memory compounds durable advantages. Wisdom in investing gives us separation versus other investment firms. Context creates that operating leverage to apply that wisdom to particular markets at hand, whether it's financial markets or adoption markets. And then reinforcement loops create that defensibility. We have roughly a 2-year lead over other VCs. They're just waking up to OpenClaw right now. We built our personal AI agents roughly 2 years ago. I've then applied these 3 lessons into a framework that I'm excited to share with you guys today. This is how we work with our portfolio companies. Utility economics and compounding effects is a quick shorthand of the questions we're asking in our framework. Does AI improve measurable outcomes? Augmentation, not just automation. Does the token enhance real economic coordination? SaaS is dead. Service as software thrives because it aligns economic outcomes with outputs. And then 3, does the system create compounding network effects? Do you extend that lead over time, or does your lead shrink? I'm excited that NEAR fits all 3 of these questions. I'm going to go through each of these 3 tests for my concluding remarks. Again, the first test, measurable workflow outcomes. On the left here, you have the NEAR Intense technical architecture. NEAR Intense introduces this intent abstraction. Human and AI specify desired outcomes, similar to our agentic architecture. Solvers now, this middle blue box, compete to fulfill those intents. Execution, complexity, the routing, the bridging, the signing is abstracted away. User never has to think about that. What this leads to, the outcomes, fewer steps, lower failure probability, higher execution reliability. This isn't just UI. It's an architectural improvement over existing systems. Second test, economic coordination. I love this concept of token-backed solver economics. Solvers compete in this market structure. Again, it's that blue box. It gives market makers or solvers economic skin in the game, competitive price discovery, and then execution quality differentiation. You remove these incentives, and the system kind of collapses. You see coordination weaken. You see execution quality deteriorate. The token helps secure this coordination layer. Ilya described this earlier today. This is structural utility. And then finally, how do you compound network effects with usage? It's a question we're driving at in our underwriting conversations with founders. NEAR just has this very elegant model. Look, more agentic intents leads to performance data, reputation signals, routing intelligence. That data creates this flywheel, better solver selection, better pricing, routing intelligence. This isn't growth through marketing, through events. It's repeatable. It compounds. It's something investors are looking to underwrite today. Fear compresses narratives. Filtration will separate the weak from the strong. We're in a K-shaped economy right now. Dispersion will reward the differentiated approaches to product and product market fit. AI will flourish humans, deliver measurable outcomes. The next $1 trillion of agentic commerce will be in this room. If you're building these AI durable use cases, please talk to me. Yeah, we love to partner early. Find me on LinkedIn. I'm generally active there. We also blog a ton on vexatonic.com. Thank you for having me.